I hope everybody had a good 4th of July over in the States. Today is, I think it's still Tuesday, July 5th. And again, for everybody in America who blew stuff up, hopefully you have all your 10 fingers, both eyebrows, both eyes. And Bitcoin is doing some little bit of unexpected volatility both ways, both down and up, around the release of the FOMC minutes that are going to be happening on Wednesday, July 6th at 2 p.m. So leading up to important releases of information or FOMC meetings that are related to federal or monetary policy, the price action in the traditional markets and therefore Bitcoin and Ethereum and most of all of crypto also behave a little bit wacky. You can get volatility both directions, which is exactly what we've been seeing. So we're going to dive in and understand at least what happened, maybe not the why. I don't know if there is a ton of why, but there are a lot of defined whats on the recent price action, both down and up. And then we're going to go ahead and cover what the outlook is moving in through the rest of this week, which it'll be a little unpredictable because we're not for sure what's going to be in this information. And then I will take live questions. I probably won't be able to roll the whole hour, or I might get through an hour, but I have my air conditioning off and it's really, really hot outside, and I can't record with it on. So I might have to keep this one a little shorter, heads up, but let's jump into these charts. All right. Let's go ahead and dive in on let's start with the daily chart. This is really interesting stuff here. I want you to appreciate, let me go on a bare naked chart. Appreciate this candle here. This is not something you see every day. So from a daily perspective, this daily candle right here, okay, starts at 8 p.m. New York time, 8 p.m. And that whole night, even into the morning, before traditional markets open at 9:30 a.m. New York or 6:30 a.m. California, right? It was going down. And its target the entire time was this candle's open. And this is not a small candle. The previous candle was like every bit of 5%. Yeah, the candle body was right just under 5%, a hair shy. That's not very small. And when we zoom into the smaller time frames, you're going to see obviously a lot more candles and it's going to be a lot more finicky. But just realize this whole drop went directly to the open of the previous candle. And then on the smaller time frames, it's going to be you're going to get more information on when it turned around. And the rate of descent was perfectly timed for market to open right then, and then it went straight up. So this was so the rate of descent, which is what kind of strikes me as interesting, I really didn't expect this, was timed perfectly for market open to hit this. So it's like really low volume, relatively low volume on Bitcoin. I don't know, it almost seems like algo plays are able to really, do what's needed with price at their whim. I mean, this is pretty wild. So from a daily perspective, look at what just happened, and I'm really going to analyze this because this caught me off guard. I did not expect this today, and so remember what those two daily candles look like. So the candle started about right here. Okay, so this is daily open about 8 p.m. Went sideways for a little bit, but then it started descending somewhere around 1 a.m. Descending. And right here, let me put a pin in it right like this. Actually, it might be a little bit more obvious with this type of candle right there. Right there on that, almost the lowest wick. So if we zoom in, that wick right, it was $1. It was $1 difference essentially. But essentially the low was the exact 5-minute candle of traditional market open. So this whole descent was perfectly timed for the market open to roar up the first business day before the release of this 2 p.m. On Wednesday, July 6th news. It was perfectly timed. I did not see this coming. Now, what I did see coming, though, and I covered this in one of my previous videos when I talked about SPX after this move, I was expecting a rejection here, and I think I might have gotten it, but I said I think it could easily come back up here and get rejected again. So it wasn't out of the question that it would do this, but not in a single day after the futures of this went down the whole time. I didn't think it'd happen in one swoop, but it did. It happened the next day. This is all one day's move. Look at it this way on SPX. So day started and it went straight up. So essentially two business day candles in a row that happened. Now, that's understanding the watt. So let me make myself big here. The watt is you have a monetary policy, which essentially is dictating where everything goes in crypto. Something I didn't really want to realize probably 8 months ago, but within the Discord community, my VIPs are, keep bringing stuff up, and it really is, it is the ultimate factor essentially right now until Bitcoin moves on its own. But and again, Discord links to that are in the description section on all my videos. At Costas Verdes with the number 2. If you want to follow me on Twitter, where I post some bomb charts for traditional market and Bitcoin, and then if you want things more handed to you on a platter without having to commit to specific times on Discord because you work too much, I provide JPEG and video recording updates for my Cryptillion YouTube tier, and you can click the join button below my videos to check that out. All right. Now, and so since then, I've realized, well, it really is dictating stuff. So the what that we have is we have an event being, FOMC minutes released from June at 2 p.m. on Wednesday, July 6th. Another what is around those news events, you get weird price action. Perhaps a little unpredictable, but usually pretty volatile. And sometimes it's volatile in both directions, and then it just settles down and goes sideways, but it just gets volatile in both directions. So we know those things. Another what piece is the target for the downside move before was the daily open, previous daily open on, at least on Bitcoin, right? It was perfectly going down to there, and the timing was perfectly timed to reach there both. So that was the pinnacle of it. So imagine you throw a baseball way up in the air. At one point, there is a snapshot in time where the baseball's velocity is 0, right? Or any ball, soccer ball, you kick it up, it doesn't matter. There's a certain snapshot. So that exact snapshot happened exactly at market open, and the target for that timing of event was the daily open. Why this happens, why it happens that way, why does it go down then up, why does it go both directions? I don't know. We're not the ones with $100 million trading desks to make this stuff happen with finely tuned high velocity algorithmic trading bots. But I don't think we're ever going to get a why, but at least I can understand the what, because I truly did not see a higher local high getting ready to happen on Bitcoin at all. And so let me show you why I made those fairly strong assumptions in the first place. My point of control keeps getting deleted, and I quickly redrew it right before I pressed play here. Let me go ahead and get this. Well, maybe I had it drawn wrong the first time, because this looks about right, actually. For my point, yeah, that is the point of control. Okay, all right. Well, first off, higher low structure. I made the assumption that with this down move, it busted through essentially 5 sets of higher lows on this time frame. Low, higher low, higher low, higher low, higher low. 1, 2, 3, 4, 5. Okay, so 4 higher lows, but five low structures. It crashed through all 5 of them and then blasted up. Usually the trend is your friend, like you just broke through 5 of these. You wouldn't expect it to fly back through all of them and make local highs. That seems extremely improbable to me. However, it did, though, use the bottom of the point of control as support. However, I thought because it broke all these low structures, 5 of them, in fact, I saw it kind of starting to curl up. I thought it would bump its head on the monthly open line, which is just shy of 20,000, or here to create a 45-degree angle. Like this. I thought this would have been the height of it. and I definitely did not see higher local highs coming. This is very, so you had volatility leading up to this both ways, essentially straight down and then straight up. Very, very aggressive manners. And I don't know if there's really a way to predict these sorts of things, from top to bottom, nail. I don't think there's a single person out there who nailed, oh, we got the bottom of this and the top of this. Maybe there's one person in existence, I don't know. But the only thing you can do is essentially, as I was talking in my VIP chat earlier today, just trade agnostically for in that moment. It doesn't matter if 5, local highs and lower lows or higher lows were broken. You now have, for example, a new trend forming with a low, a higher low, a higher low, and higher low breaking above here. A lot of people call this inverse head and shoulders, which honestly it is. It's perfectly. This is a perfect one. Perfect breakout. Could have seen that coming. I personally didn't. I saw it coming up to here potentially, especially once we got here. But I didn't see all this. So I think this amount right here is a little overkill. But again, expect very high volatility both directions leading up to those types of news events. What is going to happen after this? I honestly could see it given one more try up tomorrow morning. Bitcoin to 20,800, maybe only 20, maybe an equal high here again. Maybe 20,700 to 20,800. I could see that doing this and then coming potentially all the way back down. Because SPX, I would assume the channel will hold up in that it'll start making lower lows after sometime this week. Lower local lows, at least on the 1 hour chart, would be my guess as one option. But I do think that the chance for crypto and traditional markets to go up before 2 p.m., I think that's a pretty high chance. And because you could expect slightly outside of the norm volatility, I wouldn't assume it's going to be a lower high. It could easily be a higher high, right? To 20,800, 20,900, just a wick above here. This more immediate horizontal. This horizontal I don't think it goes back to 2017 or anything major like that. This is more of a local area horizontal. I could see that happening as well. I could see it pulling back, going sideways. Here, let me draw it like this. Another thing I can see happening, but it's going to be really hard to predict though. I could see it pull back, go like this, and then just do a very quick wick up, like on a 5-minute candle, half-hour candle, something like that, and then come straight back down. So a very fast one instead of a slow and steady. Instead of something like this, instead of a pull back into the night, So just a pull back and then it comes up here like this, and then goes down. So that could come in two flavors, essentially, that same type of horizontal target, but it could come in two totally different forms, right? One that's more convincing than the other. And if something more like this were to happen, it would allow price to have a stronger chance to form a higher low and then go up thereafter, if the yellow one were to happen. So it's really going to depend on how high Bitcoin gets tomorrow in the first half of the day, which could give you a better predictability of what's going to happen thereafter. So what I'm saying is, because of this, straight down, straight up stuff, I don't know if you can have much of an edge either way. In my opinion, I think it could be wishy-washy. However, the point on a time axis where I think one might be able to get more of an edge and cleared, more confident direction would be perhaps even after the daily close tomorrow. Tomorrow, like the whole day might be a little iffy because of the nature of what's going on tomorrow. So it might be Thursday until things are looking more confident and less, I guess, algo driven, and the natural market pressures might overtake everything, and Bitcoin moves a little bit, behaves a little bit more naturally, like the wild animal that she is. So that would be my analysis. I don't know. I don't feel an edge. I don't feel confident either way, and that really is an important thing to say, because sometimes that's when you say to yourself, okay, I'm going to sit back and not do anything aggressive right now, is when I'm not feeling certain. So I think I'm personally on the very micro short-term timeframes, I'm feeling highly uncertain, and I don't I don't anticipate getting the feeling of more certainty until probably Thursday. Thursday, 10 a.m. New York, after at least a half hour or an hour of the traditional markets open, because Bitcoin is moving directly with it down to the 5-minute candle. So if you want to see what NASDAQ futures did, it's the same shape. So take a look from here to here. Okay, so like a double high, low, straight up. All right, go look at NASDAQ futures. It's the same thing. See that? Double high, straight down, straight back up, beat both those highs. It's the same exact shape. So Bitcoin, it literally just moved with this. And if you look at SPX futures, same deal. However, this got blocked by a channel line. The SPX, and so it's getting blocked by a channel line as SPX itself is at the top of its channel. So this is why I feel like moderately confident in all this whole move up of today will end up being given back. But that's not a micro time frame guess necessarily. That's more of a midterm time frame guess over the next, I don't know, 10 days or so, because it could take a while. I mean, hell, it could squeeze a triangle in here for a while, something like this. I mean, something like this could happen, and that would be, that'd only be 3 days, I guess. That's through the rest of the week. Something to that effect could happen, where price just bounces around and keeps trying to test the upper channel and goes like this, and nothing crazy happens. But so just note that SPX, I really do think that, I don't know if this is leading stuff, but for anybody out there who is not paying attention to traditional markets, it literally is the best primary indicator for Bitcoin and all of crypto is what's happening here on these charts on IXIC, SPX. But if it's after hours, then NQ1, which you see behind here, see how it says NQ1, exclamation, and then ES1 exclamation after hours. But if it's during hours, during traditional market trading hours, it's better to look at SPX and IXIC. Because first off, the information is not delayed, but also those two, the spot, I feel, drives the futures. But the futures, especially overnight, influences the next day's open on spot. So it's kind of an ebb and flow like the moon and sun, essentially. Yin and yang. That's my Bitcoin analysis. I'm going to keep that, since I'm not very certain, I'm not going to keep going on. But one notable thing, like I said earlier, though, so SPX is hitting the top of a channel line, so is Ethereum. And SPX futures is hitting a channel line, and it raced up to it without building much support. I would say the end of this week, most of today's run has been given up. That would be my guess, but how it gets there, I don't know. And when would I be willing to say that's not probable? Well, I mean, honestly, on SPX, going back to SPX, if it can, the rest of this week use the top of this channel as support, then I'll say, okay, it's probably going on a bigger run. It's going to break up and out of this channel, perhaps re-enter it later over the next few weeks, but Bitcoin, I guess, would have its rally chances revived, essentially, if I were to see that happen. So personally, throughout the rest of this week, I'm going to be really looking at the small candles, like even 3-minute candles, tiny candles, right? So all of this here, it only lived how much? So it lived about 40 minutes above this channel line, and I'm going to be so it is going to probably come back and test it before it goes too much higher. So I'm going to be looking at interactions of SPX specifically when it's open, and then if it's not open, like overnight type of stuff, I'm going to be looking at ES1's interaction with this line right here. And if you want me to zoom out so you can kind of draw that same line, I'm going to go to the 30-minute chart, and this line goes through so the lows of the May 26th, May 27th, that swoop, it goes through there. It goes through the highs, which is the resistance of July 4th. So connect July 4th highs to the lows of May 26th and May 27th, that arena. And that would be the same line. And so the reason why I say two different things, ES1 and E-mini futures of SPX, S&P E-mini futures and SPX, is because the after hours, this SPX is not moving, and this is. So when traditional markets are closed, I'll be looking at that line and how the small candles interact with it to give me a little bit more heads up to be able to guess what the heck Bitcoin's going to be doing, especially around market open on a day where federal, Fed type of news is going to be released, and the markets are clearly getting a pretty big reaction out of it. And so over here too, this was not but this had another event that caused a lot of unexpected volatility, which was the 6-month. It was the semi-annual or yeah, semi-annual, but 6-month candle, quarterly candle, and monthly candle are closed. That causes a lot of volatility as well. It's just unplayable. Like Bitcoin just, I don't know, when does it do this? Not very often. So that's what we got for overall crypto. I think Thursday there's going to be more clear direction, but overall for the next couple weeks, I would guess down. And I also gave the conditions for when I would stop guessing down, and it's all going to rely on SPX essentially, on how it dances on top of, or lack thereof, on top of that top channel line. So I'm going to open things up to questions. Yeah, I mean, things really could tank hard pretty soon. With a lot of times leading into the news events, things spike up and then crash down during these meetings, during the Fed calendar events. So I think that's most probable. But I mean, if you think about it this way, like here, let me show you something. If you think about it this way, bear market rallies are a thing. Like they happen, right? And it's all a question of, well, when do they happen? Well, I mean, it's when the bears have been in control so long that they take an extended break, like a hibernation. So they're pressing the the sell button a lot less, because they've been pressing it so damn hard since November that their fingers getting tired. And from a macro sense, the bears might, relinquish the keys for a little bit and essentially let somebody, take over the house for like Airbnb his house or something for a week, or maybe even a month, because they need to take a break. And so the bulls, could easily have a chance to really take over here for a little bit, and that could happen. So there easily could be a strong rally happen at this point and not affect the overall lows. Let's say $14,000 or $10,000 is your low target for Bitcoin. A massive rally for up to Bitcoin, even getting above here, like past 30K, 31, 32. Even if it wicked above here and got rejected by this area up at 35, I don't think that would change the overall bottom structure or targets for Bitcoin. Just like with Solana, which was like one of the best analyses I've ever done. Good thing I recorded that and really stressed to people. But one of the best analyses I've ever done was when Solana got down here. I said, I can't remember if I recorded it here or here, but I said, hey, it's hitting a bounce area. It could easily go up to 150, got up to 146. So down here, I said that. But that's still, it's going to go under $30, right? Still, like, it doesn't matter. Don't get excited about it hitting 150, because it's a 45-degree angle from here, and crypto loves 45-degree angles to make lower highs. And so that would be something similar that Bitcoin could do, with the idea that, from a macro sense, the bears could be tired. So just because it's a bear market rallies could happen. And let me show you something else that's a visual that almost might make you think that the bottom could be in, which it could be, but I don't want to, like, it actually is kind of convincing, but like that it could be. I think I'm going to pull up the right things. Yes, okay. So these are my KOSA ribbons on the daily chart. I developed these, so these are not a Tradingview thing where you can just type in KOSA ribbons yet. Maybe I'll have somebody develop that for me one day, because this would be kind of cool to disperse it sometime in the future, not quite yet. But anyway, let's take off price. So right around the time that these ribbons on the daily cross below the gray line, so the rainbow, let's just call this the river. The river looks like a rainbow, let's call it the river, right? And this is like a wall, this is another wall, right? So wall, river, and these walls, affect the flow of the river potentially. So the river busted through the gray line, but the blue wall held up the water, and the water went back up, right? So the blue redirected the water flow, right? But the river, as it was crossing below the gray line, so put it about right there, something like that. Actually, maybe when the red was going below it, somewhere around there. So mark that off, put price back on. That was the bottom. Actually, yeah, so right when they're halfway through, that was the bottom. Right when half the river was below the gray line. And over here, the ribbons going below the gray line right here, the bottom of coronavirus was already in. Go back to the previous bear market. Right as half the ribbons or the river was at the gray line, mark it off about right there, that was the bottom. It had a double bottom, sure, but it still was, that was the bottom, right as the ribbons went below the gray line. And so what's happening now? So this is more justification, like, you know, not necessarily saying bottom's in, but that it could be a bear market rally. Look, the river is all the way under now. So right as they were halfway through, look what it got. The exact local bottom. Right as they're going halfway through the gray line, boom. So what better time? You know, so if you're getting that type of bottom signal, you know, and the psychological 20K, this is honestly a great time for a bear market rally. It really is. And all you need to make money is a trend, you know, and aggressive ones help. And if it were really to go get a bear market rally, I mean, altcoins will go up 400% from their local low when Bitcoin hit 17,600, 200 to 400%. It'd be big. Would Bitcoin do 200%? No. What percentage would that be? But Bitcoin dominance would fall greatly, and a lot of money would flow to altcoins. So, well, I mean, hell, that'd be a 75%. So, yeah, that'd be 200 to 400% depending on the altcoin. That'd be huge. That'd be a big ass. Let's see, how big were the other bear market rallies? Let's go back here. So that was 50. This bear market rally, I won't do it from that wick low. I'll do it from over here. That's 60. So it would be not necessarily an outlier, but it would be about as big. It was slightly bigger than some of the bigger bear market rallies if something like that were to happen. What if it happens if it came up straight to this blue line here? What percent would that be from its bottom? That'd be 70%. That'd be wild. That would be wild, and altcoins would really fly. But anyway, so this is showing that the last couple of cycles, like that was the exact bottom, and that would be potentially a good time for crypto bears to take a break, to say, okay, we've driven this down enough. Let's see what the bulls can do as we kind of take a break here. Let them run it up, and then the bears, you know, they'll start flipping long too. They'll make money off being long as well, because they would know, big money would know, hey, we've been driving stuff down. We're gonna hit the pause button. Well, we might as well be long since we know we're big sellers and we're reducing that vector of force down. We might as well play to the upside, and it kind of all is a self-fulfilling prophecy. And then once you know, things get too high, then they'll stop buying and start becoming sellers once again. All right, so let's take another look. Yeah, we'll take a look at Flux. All right. All right. So Flux is staying within its macro. So this is a macro channel dating back about 7 months. It's in its point of control near the top, and it has this horizontal from back here as support. So this is saying that it does, you know, especially if Bitcoin tries to giddy up, this has everything in it to go all the way up to this box, a wick above here, or even hit this blue line. But I would say this line or this box would probably stop it. So let's measure that percentage. How would that align with the bear market rally? So the blue line would be 100%, and this is not a big cap or anything, so that would sort of align with the bear market rally. But yeah, this is in a pretty good spot to if crypto were to go in a bear market rally, this is in a pretty good spot. I'm not gonna lie, to get a decent jump here, because it's really shown that, hey, I want to use this as support. And it's used its point of control in the channel as support too. So it has the structure to really break out of here, actually. And so that price target, like super upper price target, if Bitcoin races up towards 28K and all that, I would put it at somewhere around 75 to 85 cents, somewhere up there around these wick highs, back from middle of May, 75 to 85 cents. More reasonable, just more likely target would be 65. And then on the low end, if Bitcoin were to be able to giddy up and the bears relinquish control for a little bit, somewhere around 60 cents, 60, 65, and then 75 would be my targets. But yeah, this is in a very good structural position to participate in a bear market rally for sure. This one's not looking too horrible. Now, from a macro standpoint, it's definitely still down, right? It's in a pretty strong downtrend, but in the short term and midterm timeframes, it looks like it can it has what's in it to get a rally. So somebody says no way we rally to 30K. I mean, there is a way. Let's take a look. So hopefully who said that? No way rally to 30K. DCF. I mean, yeah, it does. It's not probable. You're right. But there is a way. Like, there definitely is a way. So let me take off this channel here. All right. And so this is traditional market. So Bitcoin, DCF, you said that. Okay, so you need to accept that Bitcoin follows traditional markets, right? Hopefully, if you're still in crypto, you understand that by now, right? I am assuming that you know that. All right, so let's go to the daily chart on SPX and throw on the daily 89 EMA. All right, so how high would traditional markets have to go for Bitcoin to do a 70% run? I mean, if it were to come up here over the next few days and go on an 8% run, could Bitcoin, 9x that potentially? If this starts getting momentum to the upside, you could see Bitcoin strongly outperforming it. Let's say a strong, it gets above it and dances on it for a while before then going back down. That's a 12 to 13% run. All right, and that could get Bitcoin 60 to 70% up. So you would essentially have to go like, so let me extend that line so we can visualize this. And maybe it would even start curling up a tad bit as it went above. And then let's draw this. Okay, so price going above that purple line, right? Now let's see in the past during bear market rallies, before it made new lows, right? So not counting off the lows of a dip, but the dip continued, and were there situations where the dip continued, new lows were made, but before it happened, things rallied up beyond and danced on the daily 89 like this. Let's go take a look. So here it did not do it. It was just straight down. That was coronavirus. Okay, so it did not happen there. Here, during this fairly large move in 2018, it did not dance on it, just wicked above. So this target, it did hit it perfectly, the daily 89. And honestly, daily 89, just heads up, is like the bear market rally target, essentially. You usually perfectly get rejected from it, or you dance on top of it, then make a lower high, then crash back through. So I'm kind of giving a spoiler because I already know that it does do this. Here's one. So you had a strong dip down in 2015 in the traditional markets, went above the daily 89, danced on it, lower high, went below, lost support, last lower high, then lower, then ultimate lowest low. So it came rallying up hard to get above the daily 89. See how it danced on it here? All right, so let's do another example. Here, it did not do anything with the daily 89. It just met its all-time low, then raced above it, and then used it as support. Here, a little dip. It came straight up, wicked above. So here, it essentially used it as perfect resistance and worked its way out. Now let's go to the not.com, but 2008. So Lehman Brothers crash, big recession of 2008 and 2009. Right, December 2007 is when it all started. Came down pretty aggressively, got on top of the bear market rally area, right? So this one made a high, then a higher high, which I didn't expect that. I thought it usually made a high, then a lower high. But so let's zoom into there and see how that structure is on top of the purple. It just gets above and dances on top for a couple bounces and then goes down. And that's almost exactly what I drew over there. So there is a way. Like, this stuff does bear market rallies happen in traditional markets too. And the daily 89 is a clear target. And honestly, for Bitcoin, it kind of is too. So let's go see where the daily 89 is for Bitcoin. Let's see if this aligns. Where is that daily 89? It's right at 29K. So if it dances on top of it, where does it go? To 31 and 30. There is absolutely a way. All right. So look at that purple line. It's at $29,000. So if it dances on top, that's 31 to 32K. It's a 70% potential move, right? Am I advocating for this? Like, I think this is going to happen? No, not necessarily. Not yet. But this is a pretty good time for it to happen. So see how this bear market rally in 2018, it went above the daily 89, danced, so it made a high, 2 bounces, so it gets on top, 2 bounces. Once, twice, boom. Once, twice, boom. It could easily happen. And this got how far above? So right when it touched it to here was 12% above. So let's say it takes, obviously several days to get there. Therefore, it's going to be a little lower. Something like that. Around there. Things were to charge up, whatever. Boom, 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 boom. Something to that effect. And then 12%. That's right at 12%. And that's $31,000. Right there. 31.1. Yeah, there is definitely a way. Now, again, I want to be very clear. Like, I don't think this is the most probable thing. But just like, remember when I said Solana, when it was down at $90, said it could easily race up to 150, which it did, like 60 days later or something to that effect, and then it still didn't affect the lows. This could easily happen. This could happen on Bitcoin as well. And it really is. I think I've justified why it's a good time for this type of thing to happen. And now, so since we had identified the timing could be right, well, what are the targets? Well, one of the upper targets is 2 dances, 2 bumps on top, 2 little hops on top of the day 89, getting 10 to 12% above it, and that's exactly 31K. Definitely can happen, but not probable at this point. Yeah, definitely can. Yeah, Bitcoin can do some wild, wild, wild stuff. All right. Can I create a quant chart? Is that realistic? Yeah. So yeah. So DCF also asked, yeah, is it realistic and this deep in a bear market? Yeah, this is actually a good time for a bear market rally. Being this deep is the time for a bear market rally, really. All right. So Ernie's saying, if we do, I'll look at quant here in a second. If we do end up in a bear market rally, what are your top 2 or 3 favorite altcoins for potentially going 200+% in said rally? I don't know. Layer 1s like Solana, Cardano, ones that are big and well known, but they still have really good volatility. Solana, Cardano are pretty good ones. Ethereum could easily do 100%, maybe not 200%. Yeah, Cardano could do some big. XRP could do some big, even though that's not a layer 1. But Let's see, what could KDA do? If it got on top of its daily 89 and dance, that'd be 110%. 200%. Yeah, I mean, Cardano last bear market, it did a 400% one. Like Cardano can have some really strong bear market like it did last time. Look, I mean, it went nasty, wicked, 319%. So it's a bigger asset now. You know, would it go up that high? No, but probably it could easily go 200%. It really could. Cardano could get really volatile because a lot of people believe in this stuff. So, yeah, I would say Cardano is a great option. And yeah, because it was the bear market rally king last time. So I would give this preferred dibs at least, and then. Let's see here. Solana. I don't know how Solana behaves yet in the bear market. It hasn't really proven itself, but it's also at a nice horizontal with a higher low structure. So it could get above its daily 89 bear market target and hit this horizontal up here at $79. So how high would that be? From bottom, that's 200%, but from current price, that's about 122% left. I could see that happen. All right, let's keep going. Seems like a run to the daily 89 with a rejection failed rally would create a new lower low and potentially a bear market bottom for traditional markets. I just showed you when the traditional markets go above that purple line, which is the daily 89. I gave examples where in every time it made new lower lows. Like it wasn't the bottom after that, right? Or it wasn't, that didn't get the bottom. Like the bottom happened after that rally happened. If I'm understanding your question correctly. So traditional markets, if they go above its daily 89, that doesn't mean what we saw so far was the bottom. Rather, it still has a strong chance of making new lower lows. All right, I'll look at quant. Do I have this saved? I need to save this chart because I don't know which one I use. I've used this one before. This one actually has some of the most price history. Okay, so I'll use this chart and I'll add. All right, so we're taking a look at quant. And we're talking about the potential for a bear market rally of Bitcoin, potentially going up to 30K. Not a probable scenario at this point, but just the possibility that this deep in the bear market, it's about ripe for a bear market rally. And what would be some technical targets for quant, I guess, is the question in that case. I would say, it's not that far away from its daily 89. So from that perspective, it would probably ignore this for the most part and deal with horizontals. And so seeing horizontals, I see a strong wick low. It could be attracted to there. And then you have a wick, a high here. So I would say this box, if indeed there were a pretty nice big bear market rally, something to that effect. And off the lows, that would be potentially 160%, but from current price, that could be 90% run on quant, and that would take it up to between 100 to 110. Pretty nice round numbers actually. This wick down and the wick down of December 4th and the wick high of June 25th of 2021. So both in 2021, December 4th, 2021. Wick low, and then June 26th. That's not me growling. That's a giant schnauzer in my office. Probably complaining that the air conditioner's off and it's getting hot in my office. But yeah, I would say this would be a pretty solid target if indeed Bitcoin were to race up above its daily 89 EMA along with traditional markets. And And I guess I already have kind of bottom targets, right? So I really think that even in a deep bear market, quant has a solid chance of staying at $30 or above in an extended bear market that goes into 2023. I think it could really, and if it wicked below, I think it would snap right back up. So let's say it got down there and then Bitcoin capitulated. Sure, this could go down at 30%, but it would probably come right back. So this box is this box between $30 to $40 roughly. This is going to be a pretty strong box, and I think it'll be defended even in the heat of a extended bear market with one or two more legs that people call capitulatory events, because this could be a pretty long one. But yeah, quant's not looking that horrible. Obviously, it's not looking that great. It's pretty straight down type of stuff since September. Not very many coins made a September high. That's weird because, yeah, Bitcoin was actually going down at this time. So this was moving against the market until September and then succumbed to everything. And let's do something like this where we can draw essentially a point of control. Looks like it should be about right there. And then let's see how this aligns. So that would be getting on top of this channel and everything. And then a bear market. Wow. Yeah, this actually, for this to hold up, though, I guess this channel is suggesting if things do go into 2023. So this is only till September. And if it rode the top line, that would be December. So, So in a longer bear market that lasted until 2023, it'd really have to hold on for dear life at the top of the channel, maybe dip under and go like this for a while to get through 2023. But this is almost suggesting if the bottom of Bitcoin is around February of 2023, let's just guess that this would take a nice nosedive below this box for a hot minute before then coming back up. That's kind of what this is suggesting. So this, honestly, on a wick basis, is probably not going to be the low, would be my guess. With the strong guess, even though it could be wrong, that this bear market's not going to be over this calendar year. This probably won't be the ultimate low, but I would still hold by the statement. When it does go back below, it snap right back up to $30. But this could actually have a little bit of price discovery down for a hot minute. It might not be very long, might not even be for a full weekly candle, but you could easily have a couple days down here. So with this quant analysis for bear market of 2022, 2023, I don't think $30, it could be the wick low basis, but it's kind of unlikely. However, even if a wick low is down to $20 or even $15, it would probably snap right back up to $30. So I want to be clear with that for any quant fans who might be selling their house to buy quant at $30. Well, on a wick basis, I don't think that's going to get it, actually. But from a consolidation standpoint, I think it'll spend quite a bit of time in this box throughout the next 8 to 18 months. It'll spend a lot of time in there, similar to how it spent a lot of time back here. All right, that's quant. Okay. So Compi tier member asks, "What are your thoughts on Bitcoin Cash?" I haven't covered Bitcoin Cash in a while, but we can definitely take a look here. So Coinbase should have some of the most history. So let's go to Coinbase. Haven't looked at this in a while. That's a messy, messy chart. Okay, Bitcoin Cash will have price discovery down, it looks like, almost certain. Wow, this is not holding up very well. I don't know, that looks pretty bad. That looks pretty bad, honestly. It's going to make all-time lows, is what this is saying to me in this bear market. Not in the next day, not in the next 3 weeks even, but throughout the next 12 to 18 months, it looks like it's going to have completely all-time lows. Let's look at what it's doing versus Bitcoin. So this has to be getting demolished versus Bitcoin. This honestly looks pretty bad. I think bad is my overall answer so far. This looks horrible. Oh boy. That's its whole lifetime. So it's never really made a sustained gain on Bitcoin since its inception. I don't know. Like, I mean, I don't want to. So if you're heavily invested in this, I mean, what I'm about to say is not going to be fun to hear. And you might be asking that question because you might be heavily invested into it, but I don't know. The evidence and the charts are suggesting that this could be a failed fork of a project. It's never had one sustained run versus Bitcoin, and it's supposed to be a better Bitcoin with 0 sustained runs on Bitcoin its whole life. It's been down on Bitcoin with lower lows and lower highs the whole time, maybe with one exception. Let's see here. So you got high, lower high. I guess you have a high, then a higher high, but going from here to here. So this technically is a high higher than that one, if you count that a high. It's just 2 days. So high, lower high, lower high, lower high, low, lower low, lower low, lower low, lower low, lower low. I don't know. That's kind of my thoughts. This looks like. Honestly, this looks like a failed fork to me. This does not look promising versus the dollar or versus Bitcoin. So those are my honest thoughts on it. I wish I could give a little bit better prognosis or outlook on it, but it looks pretty bad. About as bad as you would imagine for something that's supposed to be better than another project, and essentially is a fork of, or not essentially, but is a fork of it. Doesn't look good. Okay. Oh, okay. Yeah, DCF. Yeah, the way you asked that question, I wasn't for sure if I was understanding, so I apologize. Plus, this heat is just killing me. I feel like I just want to, actually, it is about 8 o'clock. I got to stop kind of soon, but I don't want to do anything. I want to go, friggin' sit down or lay down and, watch Star Trek and go to sleep by 8:30 or 9 and call it a day. All right. Yeah, I'm starting to sweat pretty bad now. All right, Near Protocol. So Near Protocol, somebody wants to know about Near Protocol, ultimate bear market bottom here. I might have covered this before, so hopefully the targets are already there. If not, then we're going to make some damn targets. Okay, nope, the targets are not here, but this horizontal has been hit. So these are pretty much useless at this point. These origin lines, I could probably just get rid of them. All right, now let's take a look here. If there's an extended bear market until, let's say, February of 2023, so let's go like this, February 1st, let's say something like that, and just look at this chart. Actually, or let's say it is November 2022, okay? And the bottom is somewhere, for both Bitcoin and altcoins, is somewhere on one of those vertical lines. And you just look at the trajectory of this, okay, so of this down move, just, I don't know, take the middle of it. Something like that. And maybe make it a little, let's just get the whole trajectory, so the whole shebang. There you go. That's been the average trajectory since its top, right? And so you can tell from here, and that's the first line, right? This is just the first line, and this would be at 23 cents. So in order for this to not get completely obliterated and go down another 90% from here, it has to change. It has to change the trajectory of it. So on near, what you're looking for is a horizontal like this one, or this is going to be another strong horizontal. So what you're going to want to do is use the rotated rectangle to essentially envelop, right? Its highs from April of this year, actually. So not its ultimate high wick, you know, back from December of 2021, but the most recent one before the down move. You'd want to envelop it to get a general trajectory. Use two horizontals like this, and you would essentially need, if it's not going to, so again, if it's not going to go down another 90% from here, it has to do what I'm about ready to show you. And it's not guaranteed it's going to do this, right? Okay, so what it has to do is it has to use a horizontal to wiggle itself out of this trajectory and then make a new trajectory that's not so damn bearish, or take the same type of trajectory and extend it and then ride the top of it somewhere down here, but it still looks like it's going to hit $1. So if it were to be able to change its trajectory and then ride down, I mean, that's still $1. And what percentage basis would that be? That would be 68% from, honestly, $1 looks like a pretty conservative guess, honestly. $1. That wouldn't be my aggressive guess necessarily. And I don't know if I only had one, if I had one guess, I don't know if $1 would be it, but that's a pretty good target point to swallow the pill of reality that, whoa, shit, this could go down another 68%, round up to 70. It could go down 70%. But you also, on this chart, know what has to be done in order for it to avoid complete catastrophe with extreme price discovery down. You just draw that rotated rectangle. It's got to get above it. And when it gets above it, is at a horizontal. And that's all you're looking for on near protocol. And the cool thing about near, though, is it is pretty far below its bear market rally target, the daily 89 here. So I have the daily 89 up. So give this a few days, come out here like this. It actually could at the top of this one I just extended. And what type of run would that be? This would be about an 80% run if Bitcoin were to go on a bear market rally. I guess it would have permission. So if Bitcoin were to go above its daily 89, this would too. I mean, hell, this could actually come hit this blue line. It could actually go on top of that daily 89 a little bit. Dance on top, get a nice wick above, hit $7.60. So even if this were to go to $7.60, $7.50, I still think it's going to hit $1 in this bear market. And that's just very similar to my having said about Solana when it hit $90 for the first time. I said, even if it goes to 150, which it did about 60 to 80 days later, it's still going under $30, probably closer to 12, and that's exactly what's happened. So I'm going to try to say the same thing very clearly about near. In a bear market rally, if near gets up to $7.50, that likely doesn't change the idea that it's probably going to hit. It's likely to hit $1 in this bear market. And that is making a premise that this bear market has several months left to go, at least till November of 2022. 2022. And that isn't that, it could go longer. So $1 might be a conservative guess. And hitting $7.50 does not change the idea that that's a conservative guess. And it could easily go under $1. All right.
Daddy.
Yeah.
I was waiting you. I thought Alex was waiting you.
All right. Gotta go. I got two little girls in bathing suits wanting to wave at the camera like, yeah, that's not going to happen. Go away. Maybe if you're dressed as a monk, I'd let you come here and wave at the camera, but not in a bathing suit. All right. Or a nun. I said a monk. A nun, dressed as a nun. All right. Ernie, community YouTube tier member asks, when you say daily 89, is that the 89-day EMA? Yes, it is. On the daily chart, mind sharing how to set that up right quick? Okay. I've already shared how to set that. Go to my playlist on my channel, or just go to my channel and search within my channel how to set up chart. And I made a 28-minute, very compressed, edited. It's very fast paced. It takes out all my ands and ums and stupid jokes or stupid laughs, nervous laughs, whatever. It's very direct and straightforward. I put a lot of work into it, and I show you how to set all of that up, just like mine, including the RSI, how to save a template so you can have a favorite 3 indicators, and if your chart just doesn't have those on there, you can have one click and they reappear. Show you how to do all that. And I think it's within the playlist, Trading Basics. I think it's in that one, or learn how to trade basics. And it's one of the ones with the newer looking thumbnails, right? A nicer looking thumbnail with actual Photoshop. After I paid some young YouTuber who's in the niche of teaching YouTubers how to YouTube, is a really young guy with like 14,000 subscribers. I paid for his package on how to make bomb ass thumbnails, and he's sorely underpriced his work. It was worth 10 times what he charged me. God, I even sent him an email. I was like, dude, you need to charge a lot more for what you just supplied me for like $40. Like, man, yeah, he had a whole like series of tutorials, and it was crazy. Anyway, but you'll look for that, how to set up a chart. But if you want to do it right quick, you can click indicators, and you can just type EMA. I like the 8 EMA, so you can type in the number 8. Oop, that's 6, Tim. Wrong one. The full snowman, not a half snowman. 8 EMA, and then when you see it, just click the star, so that the next time you start typing in EMAs, it like is there, right? So it's on your list. Click 8 EMA, and after you click it, it'll appear over here on the left. So I need to move my face. It'll appear over here. So I have a ton of them open, right? Because I saved a template. So I can go here. That's one template, and here they're back. So on this template, they're gone, and on this template, they're there, right? So I show you how to do that in that video as well. But so it would be up here for you, and then you go to the gearbox, and then you would type in what numbers you like. But these are the most commonly used ones for the, so these are EMAs, and these are moving averages, simple. So you have 1, 2, 3, 4, 5. Actually, I don't know why it says, is this the same one? E and SMA. Yeah, but you could do the 8 EMA. But anyway, you would use these 5 at least. 10, 21, 55, 89, 200, and then you can pick whatever colors you want. I like these schematics right here. Red for the 10. 10's the most common. But I use purple for 89 and orange for 200. Blue for 55, yellow for 21. And that's a real quick way how to do it. But I would recommend, if you're asking that question, I would highly recommend you watch that video and set up your chart, just like I show you. And, you know, if you like other indicators like MACD instead of Stokes, well, just do that and then save your template. Highly recommended. Yeah, and I point to that at the end of a lot of my videos. Learn, set up your chart just like mine. I mean, put the time in. I promise you. It's a solid 28-minute video. And a few of the little feedback that I've gotten on it is, you know, in the realm of tutorials for TradingView, I guess people just liked it in general. Because I tried to approach it with the perspective that I know nothing, and I need to present it to people who don't know how to use TradingView at all, so that they can have the aha moments, instead of, which is more common if you've been doing something for a while, the obstacle in teaching people how to do it, just in teaching, like pedagogy, like methodology of teaching, is you're so people who are good at stuff, they're so far separated from being new that that's the obstacle in teaching, because you're making assumptions that the base knowledge of the listener is such, and you'll say things that is still not in their vocabulary of that, and therefore everything you just explained didn't make sense because you assumed the base knowledge, and the base knowledge was not there. So I think I stripped all knowledge and I got it from ground zero. So you should be able to watch that and understand 100% of everything and set up your chart exactly how I like. Well, outside of my ribbons, I don't teach how to set up my ribbons. That's in a VIP, several tutorials, but on the Discord. Again, the Discord links to that are in the description section of all my videos. All right, let's take a look. And here we go. Adam, Solana buy orders at 12. Yeah, Solana buy orders around $12 is good. That's solid. You know, it could go to $7, could go to 4 on a wick, but I mean, once Solana's at $12, I'm probably gonna pick some up too. All right. Even though people call it a centralized dumpster fire, but still, I think it could do pretty well. So the harder it's hit, you know, as long as it survives, the bigger the run it'll be from the bottom. With the strong assumption that it survives, which is not a safe assumption, but I'm making that strong assumption. All right. Yeah, absolutely. Sol on a capitulation event on a wick can easily hit under $12. I mean, I'm targeting $12 for Sol anyway, so why can't it go through that on a wick and hit $7? Absolutely. Especially in an extended bear market where things are really nasty, you know, until fall. Maybe do a bear market rally in the fall and then start settling down around Christmas and then capitulate in January, February. It could easily hit $7. Yeah. A lot of my members that are regular on the live Discord calls, the voice, so we can turn on our cameras and microphones and talk to each other instead of you typing, which is one of the advantages of being on Discord as opposed to the YouTube tiers where I go straight towards your questions because you have an emblem next to it. FYI for folks not in the YouTube tier, I'm skipping over most of your questions because I'm answering folks who are part of the tier membership here, either the loyalty or Cryptillion. But a lot of people in the Discord community they think 12 is too high. But I still have 12. I think 12 is a damn good number. All right. Cool. All right. So yeah, Adam. Yeah, I think I've done Adam ultimate bear market target. So the information should already be on the chart as I pull it up. It's not. Okay. Well, I take that back. So we're going to piece together Adam bear market target. And I assume in general, so as I'm getting started here, that my background, actually, I'm going to make that assumption. My background might be distracting. So you could say, yeah, there we go. That might be better. All right. Okay. I'm going to assume that the bottom will be a trajectory of just this general area. Will be on this general trajectory with some type of, I guess if I extend these origin lines, it'll probably hit there. And actually it'll be the intersection of three things. So and I'm trying to tell you what I'm pre-planning and pre-assuming. Yes, I'm going into this guess with preconceived notions, but this is my strategy, and so I'm telling you my basic strategy to do this. So I'm passing this information along to you for free. So you can do bear market, bottom targets as well. So the general trajectory of the down move with a rotated rectangle first. Origin lines extended. That'll be a little trickier for you to do because I've had a lot of practice and it takes a while to get good at it, but you're going to watch me do it here. And then another thing you can easily do, which if you have the first and the third out of three, you should be pretty safe, are just straight up horizontals, right? So let's, but I think the bottom will be the intersection of all three of those together, if that makes sense. All right, so let's go down. All right, so we got the general trajectory. Now we got to extend these bad boys. Let's say this looks off first off, so let me fix this. Let's do it like this. And then I'm going to mark off the time axis. I'm going to guess potential Bitcoin bottom, crypto bottom November. If it'll let me do, there you go, or February. So that might not be enough. Wow. Okay. So these are rough guesses, right? Because I'm just extending this and I'm eyeballing it. However, now we have the intersection of these lines here going this way, and then it's intersecting a lot with this guy, right? So we're getting a general idea with this line. It looks like somewhere around, $2.30 to $4 if the bottom's somewhere closer to November, and somewhere around $1.35 to $2.35. So $1.35 to $2.35 if the bottom is in February of next year. And does that align with horizontals? So now we're going to check, okay, now let's make some horizontals. We'll make a horizontal here at this wick low, which price could easily be attracted to it. Let's go like this. Here is another pretty strong horizontal. There. This is a strong horizontal as well, off of which it just bounced. So it just bounced off this. So this, this probably wouldn't be the low. So you have 3 horizontals. Therefore, you have, honestly, this is suggesting it's going to go 260 or under for Atom. That 260 has a chance to be the ultimate bottom, especially if, this is kind of suggesting 260 to $2 to 260 is a pretty good target. And how much lower below current price would that be? That'd be 75% down from current price. And if that is not the bottom, then what you would have to see is it breaking out of this channel. And so with the assumption, which could be wrong, that bottom won't happen until November or February, it's still probable that that's going to be hit with the loose assumption that bottom is November or February, somewhere around there. And it's because it's still in this trajectory here. So this doesn't become improbable until this box is broken out of. So as of now, this box is most probable. So I'll have to stick with that idea, even though it seems crazy that this could go down another 75%, but that's what the chart is saying. It's the intersection of 3 things, and it gets the time axis. So I would say between $2 to $2.60. And these are all my reasons why you just saw me walk through of how I approached that and how I pieced it together. And I hope that was useful. All right. JBH asks, hey, everybody, join late. Curious, do you think that if we hit a crazy low of 10K or lower, it'll be a quick in and out wick, or we range 10 to 12 as we have 20K recently? Okay. I think it could be either, actually, because bear markets have behaved in both ways for Bitcoin and crypto. So last bear market, it stayed for a while until it approached its weekly 10 EMA, which I could put on there. It got 3 or 4 weekly closures and then pumped up like Monday of the next week. So if I put on the weekly 10, which is this one. So this is the weekly 10, but on the daily chart. You can see how it just slowly creeped up and really respected that daily 10, closed lots of days on it, and then zoomed up. If the bear market were to scoop out a rounded bottom like that, it could hang down there for quite a while. But other bottoms, like coronavirus, it could behave this way as well. I think, honestly, either could happen. But what you're going to be able to see, though, is how does price both race up to the weekly 10 and then interact with it. And that's going to give your best... So 2 bear markets ago, it raced up to it, then failed it. So if you were to see something like this happen after 10K and it gets above and closes below and used it as resistance on it. So these are daily candles with a weekly EMA, right? Using the MTF EMA indicator. If you see something like that happen, well, yeah, it's going to chop around that $5,000 area for quite a while because it has to redo a lot of the work. So you'll be able to tell better once you see how price interacts with that EMA. Really, that EMA is like king. It is the king EMA. It's the king moving average of any type of moving average, but it's an exponential moving average specifically. So I don't have a good guess on how it will behave. However, I'm giving you the tools to, get a better probability. Once it does start doing that, you'll be able to essentially tighten the wrench on your confidence. That's the way to put it. Yeah, you'll be able to tighten the wrench on what you're thinking and get a pretty good indication very, very quickly. Now, those were daily candles, so it could be over the spread of 2 weeks, but over 14 days, thinking about bottom like that sounded weird. I spent 14 days thinking about bottom. Like, what? That came out wrong. But if you're thinking about a market bottom, to have 14 days, that is kind of it is actually a comfortable amount of time, but it is just a blip in the radar of a whole cycle. So all things relative when I say you should be able to figure it out quickly, not in one day, but within 14 days of it interacting, you'll be able to have a damn good idea. All right, I'm probably gonna wrap this up. Unsubscribed. Well, sorry, Zach. All right. Doesn't like to hear bear market bottoms. He doesn't think Adam can go down 70%. All right. You think Sol? Okay. All right, cool. Well, hey, I'm burning up here. So next week I might be able to change the time an hour earlier for the European crowd. I've had a few folks in Europe say, hey, it's a little late for me, midnight or whatever. So next week, if you see my announcement say 6 p.m., it's an hour earlier, obviously. And it's about 50-50 right now, but this Thursday in 2 days, we'll see you back at 7 p.m. Stay safe out there. Again, the markets will be pretty unpredictable, I feel, until Thursday, perhaps Thursday by noon. New York time, Thursday 10 a.m., somewhere in there, late morning on Thursday the 7th. And I think things will be back to normal without crazy volatility in both directions. So stay safe until then. I wouldn't do anything too aggressive until that point because it's going to be unpredictable, right? So to be profitable, we have to have predictability and volatility, and the predictability element likely won't be in play until Thursday. So we'll see you next time.